This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices running at their hottest level in 14 years are poised to cut post-COVID pandemic fuel demand as consumers react to surging pump and power prices by pulling back on spending and travel, top energy executives warned on Monday. Global oil futures hit as much as $139 a barrel this week as gasoline, diesel and power prices to multi-year highs. The surges come as oil buyers shun cargoes from the world's number 2 oil exporter, Russia, over its invasion of Ukraine, exacerbating existing shortages of oil and natural gas. Energy executives attending the CERAWeek Energy Conference in Houston said prices were approaching levels that would reduce demand. And consumers, now paying 47% more than a year ago to fill up their cars, agreed.
Sky-high oil prices resulting from a potential Russian oil import ban could force governments to pour more cash into fossil fuel subsidies to shield consumers from rising energy bills, rather than use the money to fight climate change. Even before Russia's invasion of Ukraine, rising energy costs had triggered a wave of subsidies despite countries agreeing to rein them in at the COP26 climate conference in November. The last thing that governments want to do is increase any subsidies for fossil fuel use, but they have to be sensitive to the price shock, said Ben Cahill, a senior fellow in the Energy Security and Climate Change Program at the Center for Strategic and International Studies, CSIS.
Moving on to the top news in the energy sector.
Global jet fuel prices have surged to near 14-year highs in line with crude oil's surge on supply shortfall worries, slamming air carriers and travelers with steep cost increases just as air travel was starting to recover from COVID-19 restrictions. Oil prices have soared to their highest since 2008 as supplies lag recovering global demand and as the U.S. weighs banning Russian oil imports following Moscow's invasion of Ukraine. Global crude oil benchmark Brent has jumped 26% to more than $120 a barrel since Russian forces invaded Ukraine on February 24, triggering a global scramble by importers to secure alternatives to Russian crudes that are at risk of sanctions.
Oil prices rose on Tuesday, with Brent surging past $127 a barrel, as the possibility of formal U.S. sanctions against Russian oil exports spurred concerns over supply. Benchmark Brent crude futures for May climbed $3.56, or 2.9%, to $126.77 a barrel at 11:03 Greenwich Mean Time. U.S. West Texas Intermediate, WTI, crude futures for April delivery rose $3.12, or 2.6%, to $122.52 a barrel. Prices were supported after sources told Reuters the United States, the world's biggest oil consumer, may ban Russian oil imports in the wake of Russia's invasion of Ukraine on February 24. The U.S. is willing to take this step without the involvement of European allies, the sources said.
Next, we have the top news in metal markets.
The London Metal Exchange, LME, in an unprecedented move halted nickel trading and cancelled all trades on Tuesday as a race to cover short positions saw prices double in just hours to record highs above $100,000 per ton. The trading shutdown after Western sanctions threatened supply from major producer Russia is the biggest crisis to hit the 145-year-old exchange in decades. The move underscores the market panic created by Russia's invasion of Ukraine, with buyers scrambling for the metal crucial for making stainless steel and electric vehicle batteries.
China's stainless steel futures soared by their daily limit of 12% to a record high on Tuesday, as raw material nickel prices more than doubled on intensifying concerns over supply from Russia following its invasion of Ukraine. The most traded stainless steel contract on the Shanghai Futures Exchange, for April delivery, ended daytime trading locked at 22,125 yuan, $3,503.56, a ton, notching a limit-up move. The surge in stainless steel comes as nickel prices rallied almost 111% to a record $101,365 a ton on the London Metal Exchange. The metal rose by the 15% daily limit to a record 228,810 yuan a ton on the Shanghai Exchange. We will now look at the top news in the agricultural sector. Rising corn and wheat prices amid the crisis in Ukraine encouraged Brazil to trade in more of these commodities than would be expected at this time in the season, market sources told Reuters. In the first days of March, Brazil closed export deals for at least 500,000 tons of corn, they said, a volume corresponding to February's entire estimated corn exports. About 500,000 tons of corn were traded for export in Paraná, said Luis Pacheco, an analyst with consultancy T&F, citing deals from the last week. He said clients on export markets bid higher than domestic buyers would.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.